The broadcast is now starting. All attendees are in listen-only mode.
Hi, Sandy Vicani, Insurance Agency Marketing. I head up our life division here at IAMS and just want to start off and say thank you so much for attending this webinar on Friday morning. Just so greatly appreciate everyone's time. I have a few house cleaning items to go through before we turn this over to Gary Voith, who's a VP over at Baltimore Life, to go over how strong and how good Baltimore Life's products are and how you should try to integrate them into your sales. So let's go through a couple things first. Here at IAMS, we value your referrals, and how we do that is with an IAMS Business Builder. So when you refer an agent over to us and that agent gets contracted, we send you a $50 check to say thank you for entrusting us with that agent. When that same agent writes and places business with us, whether it's life, annuity, MedSep, combination thereof, we pay you 20 basis points on each piece of placed business that agent does thereafter. So there's no deadline. It's not in the first year. As long as that agent produces business and places it, you will get 20 basis points off of that piece of business. That does not come out of your commission. It does not come out of their commission. Again, that's just a big thank you from IAMS for entrusting us with your referral. We also offer all of our agents a marketing reimbursement account. So what we do is we put in $100 for every $100,000 of premium placed. And that is continuous. So as long as you're placing that $100,000, that marketing reimbursement account continues to build. Think of it as a savings account for business expenses. That rolls over each year, and there's not a time frame on that. So if you pay for a seminar or a new computer for your business, business cards, website, whatever the case may be, submit that invoice to us. We pay up to 50% of that invoice as long as that money's in your marketing reimbursement account. We also have something called a new producer builder. So if you're a new agent of ours and in your first 6 months of business, you place $100,000 of premium with us, again, that's life, annuity, MedSep, combination thereof, you can choose a 2-year producer website that we create and manage for you, or a $750 cash bonus. If you'd like to hold off because you believe that you will place $300,000 of business with us in your first 6 months, you can choose a $2,000 marketing reimbursement, which again, we'll put $2,000 in that business savings account for you. Or you can choose a $1,500 gift card or a Social Security program and 3,000 piece mailing. If you'd like to hold off because you think, gosh, I'm going to go gangbusters here and place $500,000 in my first 6 months of business, or first 6 months of being contracted with us, you can choose a 4,000 piece mailing and seminar coaching with a top producer of ours, Dave Pimper, a 5,000 piece mailing and seminar coaching with another top producer of ours, Matt Gill, or you can choose my favorite, and it truly is my absolute favorite, is a Ritz-Carlton Travel Rewards Getaway, where you choose your own, you plan your own destination getaway. And again, that does not come out of your commissions. This again is a big thank you from IAMS for choosing us to run your business through. So we, in addition to those high commissions and the new producer bonus and all that great stuff, we find it so important to have strong back office support. We don't want to end with just getting you contracted. So we try to help you save time and work smarter and not necessarily harder. And how we do that is helping you with case design assistance. So if you give us a call and you're working on a case, we'll help you figure out which is the best product and carrier for you and your client, run the quotes, send you out the forms. We give you top expertise in coaching, whether it's on seminar systems or, single premium life and using qualified funds. We set you up on paperless contracting. So once you fill out contracting paperwork, you don't have to do that again. And really important through all this is submission to commission. And what we mean by that is when you submit an application to us, we scrub that application, make sure nothing is missing. If there is anything missing, we call you that same day, let you know what we need, and then we submit that application the same day to the carrier. And then we are touching that app every 3 days. It doesn't mean that we're calling you every 3 days. It just means that we're following that application through the underwriting process to make sure it stays on track to get you paid just as quickly as possible. We have a strong marketing team. Gosh, whether you're speaking with Jacob or Sean, they can help you with flyers, different handouts. If you need help with professionally written letters, any type of stationery, logo design. If you have a logo and it needs to be refreshed or you don't have one, we can create that for you. Business cards, personal website. Again, if you have one that maybe needs face, a refreshed look on it, we can do that, or we can create and manage one for you. Different online newsletters. Social media advertising right now is huge, and if you're not comfortable with doing that or not familiar with doing that, here at IAMS we can help you and get that set up for you. So great possibilities to help you with your business, get you and your name out there, and our creative team does an outstanding job with that. We also have a strong website, www.iamsinc.com. And on this website, you can run different term and UL quotes. You can get tools. So when you call in and want a term or UL quote, this is where I run it. If you want forms, these are where I pull the forms from. We have current industry link and news. You can pull up our annuity grid and find out what the top 5 fixed annuities are, or the top 5 indexed annuities. Our webinar system, webinar calendar is here, so you can go into training and pull up our webinar calendar, register for any webinars, or you can go to our webinar library where we have all of our recorded webinars right there in our library. This is a great resource tool. I can't stress enough, if you haven't registered for our website, please do. You'll get a lot of great information there. So I'm going to do a poll question here for our IAMS Wealth Management, and checking yes just means that you're wanting some additional information or you have questions that you would like for us to get answered for you. So when the DOL ruling came out, and we just thought how important it is for our agents to try to retain as much of that business as they can without their clients going outside of them. So we created a wealth management team to help you with increased revenue, with managed money fees. It improves your clients' retention, and how it does that is you're able to offer a full range of products and services. So the DOL ruling came out. Then they suspended some rulings, and they canceled some rulings, terminated some rulings, and then they said we're not quite done. So there's still changes ahead coming up. We just want to make sure that if you are thinking about getting your Series 65, we can help you with that. If you don't want a Series 65 and you're thinking, gosh, how can I retain these commissions and these sales, we can help you with that as well. And really important here, it strengthens your relationships with clients because you're viewed differently by your clients. You're viewed as a fiduciary. So can't stress enough, if you're concerned about how this affects you, how to get into the wealth management arena, please check yes on this poll question. We'll be more than happy to get that information out or answer any questions that you may have. We also have a Life and Annuity Academy. So excited about this. Again, another poll question. Checking yes just means that you are interested in getting additional information. So with our Life and Annuity Academy, we have about 3 a year. This is an all-expense paid trip. We pay for your airfare, lodging, meals, and what we do is we gather agents all across the United States. We choose between 35 and 40. And gosh, we had close to 1,000 register at our last one. And we go over different sales ideas and strategies from top producers, indexed annuities, how to unravel them, when to use them, when to turn on an income rider, different life and annuity industry threats and trends, how to overcome client objections, seminar system. So if you are looking at, a really simple seminar, whether it's cookies and coffee in a library or your more formal sit-down seminar dinners, we can go over those and tell you what works best for your area. Large life case managing and marketing, wealth transfer tools with single premium life. We go over private financing and the infinite banking concept. It is just a great opportunity to meet other agents across the United States to figure out what they're doing to bring in sales. So again, checking yes, you're just asking for additional information, and we'll make sure to get that out for you. We here at IAMS, you get great trips from Baltimore Life and all of our other carriers, but we found it really important to offer a trip here in addition to those high commissions, in addition to marketing reimbursement and new producer bonus, and again, the carriers trips here at IAMS, August 25th through the 29th will be our 2019 Marketing Summit, and that'll be held at the Ritz-Carlton in Naples, Florida. Great opportunity for you and a guest to attend. We try to get just as many people there as possible, so we have long invitational periods from January 1st, 2018, and that runs all the way through June 30th, 2019. If you'd like to attend, the only way you and a guest are able to do that is to get contracted and place business with us. And you can do that with a combination of, $3 million of placed annuity premium. You can do $1.5 million of Medicare SUP premium, $2.25 million with single premium life, $250,000 of life target premium, or you can do $600,000 of long-term care premium. Again, would love to see everyone there. We cover all the expenses for you and a guest. And again, it's at the Ritz-Carlton in Naples, Florida, August 25th through the 29th. So right now, I'd like to hand it over to Gary Voith. Can't stress enough what a great friend Baltimore Life is to us with their great products for single premium life, and he is going to go over those and just show you the importance of putting this into your portfolio. So Gary, if you'd like to take over.
Absolutely. Good morning, everyone. Good morning. Thank you very much, Sandy. Thank you, IAMS, for such a great partnership we've had through the years with IAMS and the production you guys give us. We really appreciate it. Well, welcome on a Friday. It's always, sometimes a good day just to recap what you've done in the week, kind of get planned for the new week. Hopefully the session we have today is going to provide you with some new information if you've never been exposed to us before on our asset transfer portfolio. If you are contracted with us currently and really haven't touched the products, hopefully it's a nice refresher to get you back in that mode and looking at some opportunities with your client base and new prospects. But today we will be talking about our tax-efficient asset transfer program featuring two products in our portfolio, our Generation Legacy and Single Premium Whole Life products. Both of these products are really designed with your senior clients in mind who have what we like to call some leave behind money. Money they don't need to live on, they simply want to leave behind to their family or favorite charities, thus creating a legacy for their family and doing it in a tax-efficient way. No matter whether your clients have money coming from after-tax cash funds or annuities or qualified funds, we, I believe, have products that are designed for their needs and the needs that you have to settle for them. So let's get started talking a little bit about the marketplace. It's absolutely huge. Roughly $1 to $3 trillion in wealth is out there right now, and that's being transferred, this $1 to $3 trillion in wealth, each and every year And that's continued to happen. It's projected to happen between now and the year 2052. We know out of this wealth transfer each year that about 55% of your clients' wealth is moving on to family members, and about 16% of their wealth is moving on to their favorite charities. So yes, 71% of your clients' wealth is moving along to people and organizations they know and love. The question is, are they maximizing the amount of wealth they're able to pass along, and are they really doing it in the most tax-efficient way? Well, the first product we'll talk about as a solution is our Generation Legacy product. And this product is really designed to help you facilitate the transfer of single premium dollars from either non-qualified deferred annuities or other qualified plan funds, 401ks, IRAs, 403bs, and the like. And of course, these are funds that are not needed for daily living. We talked about the goal of a client that wants to increase their estate, pass money on to their heirs and favorite charities, but do it tax efficiently with the use of life insurance. As we'll cover in more detail, the issue age on this product is 60 through 80, and our product, by writing a single application, we will issue two products that will work together as one. We'll issue a single premium immediate annuity that you'll facilitate the transfer of funds into that SPIA to fund a limited premium payment whole life product. Once issued, by writing that single app, both of these products will be seamlessly administered together by Baltimore Life. Nothing for you as an agent to do, nothing for the client to do, to give you all the benefits that we'll be talking about here today. We offer simplified underwriting for this product, essentially a blended rate of standard through Table 4 types of risk. And with issuing the product, automatically upon issue in all states where it's approved, we automatically issue our accelerated death benefit rider, which truly can provide, as you would agree, I'm sure, living benefits to your client at a time when it's needed most. So we'll get into details on all this. There's another wrinkle to Generation Legacy that we introduced late last year, and it's really for those situations, and I'm sure you've seen these, where you have a married couple and one of those spouses, in fact, are healthy and could qualify for life insurance, and the other spouse probably maybe couldn't be insurable under 4 tables, but has a lot of qualified funds that they're trying to distribute and may not have as much time to distribute those funds because of the illness they have. So what we created was a variation of Generation Legacy. We call it the spouse option. It is ideal for married couples if one spouse is eligible for life insurance and the other spouse can provide the funding. The healthy spouse does, in fact, become the life insured on the life product, and the SPIA is basically set up with a rollover of funds from the unhealthy spouse. That SPIA will be used to fund annual premiums over a 7 or 10 year period to the life product. Now, keep in mind, the annuitant, in this case the unhealthy spouse, does waive the right for the beneficiary, which is the healthier insured spouse, to commute future SPIA payouts in a lump sum upon their death. Those SPIA payouts are intended to pay the life policy on the healthy spouse, so you can't commute it once the unhealthy spouse dies to stop paying the life product. So that's basically the setup. It really does benefit both, and imagine, if you will, you have an unhealthy spouse who's trying to pass on a greater amount of their estate versus money coming just from an IRA. They can do it through this type of funding arrangement for their healthy spouse that passes on. So let's take a look at this market. The annuity qualified plan market, it's about $2.7 trillion of in-force deferred annuities out there. So just over 65% of those funds are in tax qualified employer plans, and nearly 35% of those funds are in those non-qualified deferred annuities that you're selling. As I'm sure you would agree, a significant share of those annuities funds especially are simply being transferred to the next generation. Eventually, if you keep an annuity and you really don't need it for income, you're not going to annuitize it. Eventually, you're going to have a required minimum distribution, right, at 70.5 for qualified funds. And of course, if you die and never distributed those funds completely, there's going to be a taxation on the gain for those annuity funds that are being passed along to the survivor, and more than likely the survivor is going to be in a higher tax bracket. So we would all agree that annuities are great products. There's no doubt about that. But is it really the best product to die with? The other challenge you have here is that with tax qualified, pension funds that are rolled over, or IRAs or 401ks or 403bs, eventually you're going to have a situation where people have these funds and they're looking for ways to distribute it. They might want a portion of those funds distributed for income purposes, but maybe another portion that they can pass along. So there's a great opportunity in that qualified market to help people not only generate income through products like a SPIA that can give them income, but also give them a way to pass along a greater amount to their heirs through a generation legacy product. So let's think about the concept of what generation legacy is and how it works. I want you to think of generation legacy as a gift your client's able to pass along to the next generation. And you're going to help them pass along this gift by transferring money from annuities or qualified plan funds into the gift box, essentially. By writing a single application, Baltimore Life, we will issue two products, a single premium immediate annuity along with a limited premium payment whole life product. Now, over a period of either 7 or 10 years, depending on the issue age of the client, Baltimore Life will automatically make an annual premium payment from the SPIA to pay premiums on the life product. So what dictates the payment pattern? It is the issue age, and if the client is 60 to 74, we'll issue a 10-year payout on the SPIA along with the 10-year limited premium payment whole life product. If the client is 75 to 80, a 7-year payout on the SPIA along with the 7-year paid-up life product. So here's where the product really gets rich in its benefits. What if the client were to die during the period of time while the SPIA is funding that life product? Well, we know that if the client dies at any time and the policy is enforced, that the life insurance will pay an income tax-free death benefit that's greater than the single premium paid. In addition, though, if the client dies during that 7 to 10 year period while the SPIA is funding the life product, the remaining payments from the SPIA would also be paid to the named beneficiary. So we'll talk more about the payout of that SPIA, but this benefit is very competitively rich out there in the marketplace in terms of product offerings, and we feel as though we have a very good competitive advantage with this product offering for you. So at the end of the 7 or 10 year period, the life product becomes paid up, the SPIA goes away, it's already done its job, and this life product continues to provide an income tax-free death benefit greater than the single premium paid, continues to build cash value on a tax-deferred basis, and yes, continues to provide the accelerated death benefit that we'll be talking about. So just to recap, issue ages 60 through 80, and we base our pricing on current age or age at last birthday. Now, the reason this is so important is that you're going to be dealing with the transfer of funds from other products and institutions. That transfer process might take 20 to 35 days, let's say. We will issue the policy the day, based on your client's age, the day we receive the funds. The minimum premium to get this started is only $5,000. How many clients do you walk into that have multiple annuities, let's say? They've bought multiple annuities over time, 1-year guarantees, 3-year guarantees, 5-year guarantees, 7-year guarantees, whatever it might be, and they're just letting it ride. They're letting the money ride. They're not doing much with it because they have no intentions of needing it for income. Great prospects for this product. Now, the average premium that we see on this product is about $60,000 to $65,000. So it's a pretty nice sizable single premium. The maximum face amount that we'll issue on the life product based on the single premium paid is $450,000. Now, we do have 2 underwriting classes, either non-tobacco or tobacco, and again, we will issue on a simplified underwriting basis a blended rate for any risk standard through Table 4 in one of these 2 underwriting classes. Cash values, they accumulate in the life insurance product on a non-participating basis. Partial surrenders. You can make partial surrenders from this product anytime after the life policy becomes paid up, 7 or 10 years. Loans, they're available at any time at a maximum rate of 8%. So now let's talk about the accelerated death benefit rider, because truly this does provide living benefits to your client, but clearly, you never want to sell this as a replacement for long-term care. Certainly people that have a long-term care need, a long-term care policy is the best, most comprehensive solution. But as you know, many of our seniors can't afford long-term care insurance. It's a very difficult market out there. And, it's a product that, is complicated to sell in many cases. So, it's really nice to know that you can accelerate the death benefits of a life product in certain life event or health type of situations. So there's 3 health event triggers that will allow your client to accelerate the death benefit on the life policy through this rider. The first is terminal illness or qualified nursing home facility confinement, or finally the third is in extended care, home health care, and adult daycare situations. The accelerated benefit can be accelerated anytime after policy issue, and once you accelerate the benefit, the amount of money that you had taken essentially creates a lien against the face amount of the policy, the death benefit, and that lien will accumulate at an annual interest rate of 8% prior to the client's death. We'll talk about that lien process and payout examples in just a moment. Now, the maximum that you can accelerate is $250,000. The minimum is $5,000. But here's the great news. This benefit is paid out once. It's paid out in a lump sum. So there's no restriction. These are unrestricted funds that your client has to use for whatever reason they deem necessary. Health reasons, pleasure, it really doesn't matter. So now let's get into the definition of these accelerated benefits and the percentages of payout. The first is terminal illness. Simply put, the client needs to be diagnosed by their doctor as terminally ill with a life expectancy of 12 months or less to live. In this case, they can accelerate at a maximum rate of 75% of the face amount on the life policy. The second rider covers both qualified nursing and extended care situations. And for qualified nursing, client needs to be diagnosed as chronically ill, confined to a qualified nursing home facility continuously for 90 days with the expectation of a permanent confinement. Here, they can accelerate at a rate of 50% of the face. For extended care situations, again, chronic illness needs to be present, have been so for 90 days, but now they're requiring care provided by either a licensed home health care agency or a licensed or state certified adult daycare center. And here again, they can accelerate up to 50% of the face amount. Now, 75 and 50% are the maximum accelerated rates. There are 6 to 7 states roughly that have reduced percentages. At the bottom of the footnote there, you see that Pennsylvania has a maximum percentage of 65% for terminal illness and 40% for extended care and home health care and qualified nursing situations. So our agent website has state approval charts on it, and we do outline those states that have reduced accelerated amounts. So what is the definition of chronic illness as it applies to the nursing home and extended care situations? Well, if your client satisfies either of these definitions, we consider them to be chronically ill. The first is they are unable to perform 2 out of 6 activities of daily living. Maybe they're okay on their ADLs, but possibly they could be suffering from a severe organic mental illness, such as Alzheimer's or dementia. In either case, we consider them to be chronically ill. So now let's take a look at a example of how this benefit does accelerate and how the calculations work. Here's someone who has a face amount of $100,000 on the life policy. We're going to say in this example they're terminally ill, and they're going to take the full accelerated rate of 75% of the face amount. So as a living benefit, they could take a cash payment, if qualified, for $75,000. We do charge a one-time service fee for the transaction, so the lien is established at $75,100. Now, if they were to die immediately after getting that money, no time for interest to accrue on the lien, the remaining death benefit would be calculated by taking the face amount of $100,000 less the lien of $75,100, giving you a remaining death benefit of $24,900. But this is the more likely example, and that is the client dies 1 year after accelerating the benefit. So they still got the $75,000 up front, but now the math to get to the final death benefit is taking the face amount less the original lien, $75,100, less 1 year's worth of interest, giving you a remaining death benefit of $18,892. Now, these riders are designed to be able to pay cash out now, but still have remaining death benefit in just about any situation. This client, though, would have to live 4+ years in a terminal condition for the interest to outrun the remaining death benefit. So pretty unlikely that that would happen, but technically it could. So could these riders that we've talked about terminate in any situation? Well, it's a possibility. Here's the first. What if the life policy ends? And you're thinking to yourself, how could the life policy end if the SPIA and the life policy are administered together and the life policy is automatically being paid each year? Well, let's say year one, the client gives you $100,000, and 2 years later, they come back to you and say, hey, I thought I didn't need that money, but now I do. Can I get as much money back as possible? Well, now you would have to cash out the life policy, which has very little cash in it, and then have the remaining payments from the SPIA paid out to the client at that point. So that would, of course, end the riders, and of course end the contract as we know it, but they would get the SPIA payout that would remain and the life cash value. If the client dies, of course, we pay a death benefit, not the accelerated death benefit. And finally, what if the accelerated death benefit is received under another rider, meaning that, let's say they accelerated at 75% of the face amount let's say they get 50% for qualified nursing, and they come back later when they're terminal and say, hey, can I get another 25%? No, once you accelerate at one of these riders, using one of the riders, you can't come back and accelerate a second time. The riders end once you do that. Now, what if you accelerate in the example of the terminal illness example, and the interest exceeds the remaining death benefit? This is where the client was terminal and lives 4+ years. Very unlikely that would happen, but if it did happen, technically the interest could eat up the remaining life insurance benefit. But of course, there's provision in the contract that the owner can repay all or part of the lien at any time to keep this qualified as a life insurance policy. Keep in mind that even though you accelerate a benefit, there's still cash value accumulating in the life policy. And if you accelerate this benefit on the contract, you cannot also activate a policy loan. Or if you had an existing policy loan, you cannot go and accelerate the benefit. You can only have one or the other. The last thing to remember is that no matter whether you accelerate with our company's accelerated death benefit rider or any company's similar rider, you should always tell your client to consult with their tax advisor. So let's look quickly at a recap. Here's a 70-year-old non-tobacco user who, let's say, had $50,000 in an annuity, no plans of ever needing it for income. So at this point, they put it in Generation Legacy product. It goes into the SPIA. The SPIA funds the life policy, and the life policy has a face amount of $78,000, nearly $451. So upon issue, this client has increased their estate value by over $28,000. Keeping in mind, if they die in the first 10 years, the remaining payments from the SPIA would also be paid. But look at these payouts under the accelerated death benefit rider. If you have a client who is at end of life and has really no provisions of coming up with cash because they don't have long-term care insurance or whatever, isn't it nice to know that they can get this amount of cash as a living benefit to offset health expenses or any type of need they have for money at that point in life? So now let's talk about another, what we feel is a tax efficiency behind this program. And it has to do with the transfer of funds from annuities or qualified plans. So if a money was coming from an IRA where the money has never been taxed before, eventually Uncle Sam's got to be paid on the distribution, right? Because the money's never been taxed before. Or let's say the money is coming from an annuity where there's a basis and a gain. Eventually, Uncle Sam is going to get their money on the gain. But the advantage of this generation legacy setup is that what if you roll money, let's say from the IRA, where the money's never been taxed before, and you roll it into the SPIA portion of the generation legacy product. Well, now the money is going into a qualified funding vehicle for life insurance, and as a result, we're able to spread the tax out on that gain over a 7 or 10-year period, depending on what the payment setup actually is. So yes, the policy owner will get a 1099 on the distribution each year, the taxable distribution each year, the money from the SPIA that pays for the life insurance. But the beauty is they're spreading it out over that 7 or 10-year period. Now the payment, excuse me, that we make from the SPIA to life product does satisfy the required minimum distribution. Excuse me, I had to cough there a little louder. You didn't want to hear that. The SPIA payment that we make each year from the SPIA to the life product does satisfy the RMD rules. So there's no worry about calculating the RMD for the payment from the SPIA to the life product. It's already satisfying those requirements. The other thing to remember is that we know that the life insurance is going to be paid income tax free. But what about the remaining payments from the SPIA? The remaining payments from the SPIA would be paid to the named beneficiary, but of course, the named beneficiary would get a 1099 on the taxable portion of those SPIA distribution payments. So if the money had all been coming from an IRA, that would be 100% taxable. They would get a 1099 each year accordingly. If the money came from an annuity, they would be getting taxed on the gain, not the basis. So keep that in mind as you understand and try to explain this product to someone. One more thing about tax to explain, and that is the application. When you're transferring funds from any qualified type of plan, technically the client can elect for a tax withholding. Normally they could, but in this product, the way has been designed, we cannot accommodate a tax withholding on funds that we're transferring. So please make sure you check the box on the app that you do not want tax withheld from the annuity you're rolling over, because otherwise we have to send everything back to you. The product just won't work. And quite frankly, the client can't spread their tax out over a 7 or 10-year period, which is a key advantage. So now let's look at some examples of premiums to death benefits. And I want you to think about those clients and prospects you have that could fit into these situations. Here's a client 65 who, let's say, has 50 grand in an annuity, not needing it for income. Because they're 65, we'll issue a 10-year payout on the SPIA along with the 10-year limited premium payment whole life product. For the male, the face amount issued is $77,361 and change, and for the female, the face is $87,031 and change. So what did you just do for this female 65? Well, you've increased that issue, her estate value, by over $37,000. Keeping in mind that if she dies in the first 10 years, the remaining payments from the SPIA would also be paid. Now, what if she says to you, Sandy, I think, I've got money in an annuity right now, I'm making 3% interest, and I'm in a 25% tax bracket. Wouldn't I be better off keeping the money there? Well, it would take this client over 19 years in this example just to accumulate the $87,000+ in death benefit that we're providing up front. Keep in mind that $87,000+ is going to be paid income tax free to their named beneficiary. Here's the 75-year-old, a little older, a little shorter life expectancy, but the numbers still look good. Because this client is 75, we'll issue a 7-year payout on the SPIA, along with the 7-year limited premium payment whole life product. For the male, face amount $61,516 and change, and for the female, the face is over $67,000. So even at 75, your client is going to experience over a $17,000 increase in their estate value at issue, and for the male, just about $12,000. Knowing if they die in the first 7 years, the remaining payments from the SPIA would also be paid. I tell you this, I'm a licensed agent myself. I've been marketing this for many years. And I tell you that clients, once they understand the basic concept about asset transfer and then how this product can be provided as a solution, when they buy, they're not only going to buy, but they're going to tell their friends. And I tell you, you should be asking for referrals early and often, because this will be perpetual with getting in a good network of clients who give you good referrals. But of course, you always have to ask, right? You're not going to get unless you ask. So here's a ledger that you can do with us using our proposal software that you can find on our agent site. You can also get the same ledger look with our MobileLink software right on your smartphone or smart tablet, and I'll talk about that near the end of the session today. So here's the female, 70, non-tobacco, who had 50 grand coming from an annuity with a cost basis of 40,000. You see in column 3, there's her money of 50,000 going in, and out of that money that was put into the SPIA, $5,570 a year is going to be used to pay for the life insurance each year over 10 years. From that $5,570, we calculate based on interest that nearly $4,000 of it is excluded from tax, and then the estimated taxable income based on the interest factor over 10 years is about $1,571. So this is the amount each year your client will get a 1099 on. It's very important that they understand this, because you never want to surprise someone about getting a 1099 after that first year. The ledger goes on to show the death benefit, $78,451, and of course the commuted lump sum of the SPIA if death were to occur early. What about forms? We try to make this simple for you. If you go out to our agent website, we have product toolkits set up for every product you're contracted for with us. And in the toolkit, you'll really find everything you need to sell and market our products. One of the things you'll have is something called the printable application and forms package, which will give you a few quick questions to understand your situation, generate the forms for you that you can print, you can email, whatever you might need to do. In that product toolkit, as I mentioned, you'll find many other sales and marketing tools, client brochures, agent guides, point of sale presentation software, fact finding tools, letters, phone approaches, just a number of tools out there that you can use. I'm going to try to show you a few of these at the end of our presentation today. So the second product, it's single premium whole life. Now you've got the idea of what we mean by asset transfer and all the benefits. Create an estate with leave behind money, use the advantages of life insurance to pass along that income tax-free death benefit. Same advantages for single premium whole life as generation legacy, but a couple of key differences. The first of which is the source of funds you're going to use. This product is really funded by single premium dollars coming from after-tax cash vehicles, CDs, money markets, mutual funds, and where appropriate, 1035 life-to-life product exchanges. Another key difference is the issue age, 50 to 85, broader issue age of eligibility because you have after-tax cash funds. Another change is, in fact, the simplified underwriting. We have blended rates for standard through Table 4, which is Tier 1, and then Table 5 through Table 8. Finally, this product also includes the accelerated death benefit rider, which provides the same 3 health event triggers you have with the generation legacy rider, but this has a little bit more lucrative way to have the payouts work, and I'll show you how that works. So issue age, again, 50 to 85, based on current age or age at last birthday. We have 2 underwriting classes, non-tobacco and tobacco, and in those underwriting classes, you can either get level 1, which is standard through Table 4, or level 2, Table 5 through Table 8. Minimum premium, it's only $5,000. How many clients do you have out there that have, let's say, multiple CDs set up at the bank that, you have CDs for each of the kids, each of the grandkids, a CD that's going to be passed along to the favorite charity? These are great prospects to sell this product to. The average premium we see is about $30,000 to $35,000. Here's another real example of how agents get started selling this product. What if you run into a senior and you're trying to sell some life insurance, say a final expense type of product, and they say to you, Sandy, I really don't need life insurance. I have a burial account set up. Well, that means one of 2 things. They either have a pre-arrangement with their local funeral home, or they have, say, a $15,000 CD set up in the bank that their kids know that's money set aside to bury mom. Well, Mrs. Jones, you're 70. You're going to live many more years and costs are going to go up. What if I was able to show you a way to take that $15,000 in your CD and provide your family with nearly a $25,000 income tax-free death benefit? Oh, by the way, if you became terminal in a nursing home or an extended care situation, you could get at some of that cash as a living benefit to use for whatever reason you wanted, and still we could set it up to have some remaining life insurance benefit. Is that of interest to you? That's called the burial account concept, and I can't tell you how many agents get started selling single premium products in this way, and then they quickly understand to sell the bigger premiums, you need to do good fact finds and uncover the intent of that money. Does the client need it for income or have some other intent for it? Now, the maximum face amount that we sell in this product is based on the maximum net amount at risk. And that's really just the difference between the face amount that we issue and the single premium paid. Cash values, they accumulate on a non-participating basis, but here's another key difference. Partial surrenders. You can actually, because you're working with after-tax funds, take partial surrenders from this product starting in policy year 2 at a rate of 10%, 20% in year 3, 30% in year 4, 40% in year 5, and from the 6th year forward, 100% of the available cash value can be taken as a partial surrender. Loans are also available to you. Accelerated death benefit rider. 3 health event triggers again. The same 3 health event triggers I covered for the Generation Legacy rider exist here. The same idea of getting the benefit paid out once in a lump sum, and these are unrestricted funds. But here's a key difference. This rider either allows you to take a full acceleration within a percentage limit of the benefit and have no remaining life insurance, or set up a partial acceleration where the client out of 100,000, let's say, wants 25,000 used as paid up life insurance, and they want to accelerate the other 75,000 of face. That's called a partial acceleration. So for terminal illness, example, same definition of qualified, 12 months or less to live, but now if they wanted to do a full acceleration, they accelerate at 95% of the face, less a $250 admin charge. For qualified nursing, same definition of qualified, but now because they're going to live a little longer, the maximum accelerated rate is 90% less the $250 admin charge. And finally, for extended care, home health care, and adult daycare, they'll live longer yet, so the maximum accelerated rate is 80% less the $250 charge. Now, in all 3 of these examples, if the client wants to, as I said, do a partial acceleration, keeping a certain amount of paid up life insurance and accelerating the balance at these percentages, they can. If they do the full acceleration, though, that's it. The contract's done. We make a payout, and the contract's over. Definition of chronic illness, the same. 2 out of 6 activities of daily living, or a client suffering from a severe organic mental illness. So now let's look at premiums to death benefits. And I want you to think about those people that you run into with those scenarios we've talked about, right? CDs, money markets, mutual funds, those types of things. Here's the 65-year-old with 50 grand, and for the male at level 1 underwriting, non-tobacco, we're going to issue a face amount of nearly $82,000. For the female, the face is nearly $93,000. But with this product, because you have that second tier of underwriting, tables 5 through table 8, you're going to issue some clients with more challenging health conditions. And what you're going to find at all ages and genders, the face amount difference between level 1 and level 2 is about $5,000 to $6,000 less. So what did you do for a 65-year-old lady who had to leave behind money of 50 grand? You've increased her estate at issue by nearly $43,000. Now, if she were in a 25% tax bracket making 3% on her money, it would take her 28 years just to accumulate that increase or bump you gave her an estate value of nearly 43 grand. Keeping in mind that death benefit of almost $93,000 is there to be paid income tax free. Here's the 70-year-old, a little older, a little shorter life expectancy, but the numbers still look good, don't they? For the male, level 1, face amount's nearly $74,000. The female, the face amount just over $82,000. And again, for that second level of underwriting, the face amount is about $5,000 to $6,000 less. Now, I'll tell you this, even for a female at 70, when you can increase her estate by over $32,000 at issue, that's a big deal, isn't it? And it really will drive home for those seniors who think, hey, I'm going to set this CD money up for my grandkids to help with their education. And now you show them the increase you're going to give them after the net effect of that CD after tax and what you're going to pay out here on a life insurance product. It really is impressive. And again, lots of sales, lots of referrals. Forms, same story. Go to our app package, get all the forms you need. And again, out in our product toolkit, we have a lot of great sales and marketing tools for this product as well. The thing I want to stress before I go into this last piece is that any questions you have, please pick up the phone and call your friends at IAMS. Those, great partners with us, obviously great partners with you, and they will work you through all this in terms of getting you help that you need. Now, the other thing that is very important to know on this product is, especially if you're an annuity producer and you say, I don't write life insurance. I like annuities. They're simple transactions. I don't like the life insurance underwriting. Well, we have something for you, and that's our point of sale underwriting process. When you write an application for either of these products with us, as soon as you finish that app, you can pick up the phone with your client, call our call center, and we're going to complete a live underwriting interview with your client that lasts about 12 minutes or less. We're going to ask them the same health questions that you completed on the paper app that you're going to submit, but we're going to get their permission, of course, to get the MIB and the drug history. That way we can do live underwriting on the phone and give them an immediate underwriting decision. After the app or the interview is done, any underwriting decision is not given to the client, it's given to you. You're the one that's going to be telling the client if they were approved, and we will provide you with a confirmation number to write on the app. Obviously, once you finish the process, regardless of the decision, get us the paper that you completed. And all this information about the call center process is printed out in your app package. So the toll-free number is 888-368-9678. The hours are 9 a.m. to 10:30 p.m. Monday through Thursday, as well as 9 a.m. to 6 p.m. on Friday Eastern times. We do support English and Spanish languages. Other languages are available upon request. And we do have TTY services in English and Spanish for your hearing impaired clients. The key thing to know, though, that this interview must be completed within 5 days in order for us to complete the underwriting process. Now, you might say, well, what if I write an app on a Saturday or after hours? What do I do? Pick up the phone after your appointment, call the call center, and leave your name and number, your client's name and number, and a date and time you want us to call them. We'll get the interview done. You don't have to be present. And again, we're going to call you back with the underwriting interview that you'll communicate to your client. How do you pre-qualify the app? We have an app for each product, and the reason we do, for Generation Legacy, there's one tier of underwriting. So we have one section of medical questions, Part A. So if you get any yes responses in Part A, it means your client doesn't qualify through 4 tables of underwriting. But if you get all no answers, the height and weight looks good, the MIB and drug history looks good, we're going to issue. For single premium whole life, because we have 2 tiers of underwriting, we have a Part A and a Part B. Think of Part A still as your knockout questions. If you get any yeses in Part A, it means you are not qualifying through 8 tables of underwriting. But all no in Part A and Part B with everything else looking good gets you level 1 underwriting, standard through table 4. If you get all no in Part A and 1 yes in Part B with everything else looking good, you get tier 2. So with that, I'm going to transition just for a few more slides, Sandy, as we're finishing up.
Okay.
And that is, I'm going to jump to the product toolkits that we have out there for your use. So let me just jump into this real quick and finish. This is a screenshot of our agent website out there. And again, a lot of the tools that we've talked about are out on the agent website in these toolkits at the top of the screen. This is an example of one of the product toolkits that has your printable application and forms package and a lot of other great tools for you. Some of the quick ones I want to highlight, this is the biggest one. Write this one down if you're not selling with us now, because you can quickly figure out this product using this tool. And that's our MobileLink software. You go to this URL address, mobile.baltlife.com, and when you get to MobileLink's site, create a shortcut on your phone, and it'll create a little icon that you can launch this quickly. But out there now, you have an electronic agent guide in the palm of your hand. You have the product information, the underwriting guidelines, and an interactive rate and value calculator. Remember that ledger I showed you before for generation legacy? You can do it with this. These are non-illustrated products, so you can do all of your rate and value calculations with your client right here. We have point of sale presentations. So, you know, very nice point of sale presentations to explain the concept of asset transfer, features and benefits of the product and how it works. I'm flipping through these quickly because we have short on time. Let me get through this. We have examples, let me get to it, hold on, of a great fact-finding form. If you need help with your fact-finding to help find those current assets not needed for daily living, this is a good tool to do it. You can also evaluate the client's current income here and give those key dialoguing questions that you want to generate affirmative answers to. We have a tool out there, it's a document called Single Premium Sales Ideas. Lots of great single premium sales ideas that you can generate from this document and start thinking of a prospect list of people that you can immediately go see. I went through a couple of these today talking about annuities not needed for income, the burial account concept. We talked about the spouse option for generation legacy, a number of different ideas. We have these very nice customizable marketing flyers. They explain the concept of asset transfer, features and benefits of a solution, and then you can customize with your contact information. We have print ads, we have letters, we have phone approaches, third-party articles. All this is out there again on the agent website for your use. So with that, woo, was that a whirlwind on a Friday with a blizzard going on out there in the Midwest?
Yes.
I hope it was, and I hope it really was an exciting session for you and you picked up a few ideas. But Sandy, thanks so much for the opportunity and the great partnership with IAMS.
Yeah, I just want to make sure I get out there just quick questions, and while we're answering questions, geez, if you like to get contracted with Baltimore Life, if you're not already, please check yes. We'll get you out that information. Again, any questions, we'll be happy to answer those. Everyone who is registered for this webinar, you will receive a recorded copy of this along with my information. I'll contact each and every one of you to make sure if you do have questions, I get those answered. Any quotes that you'd like for us to run, we'll be more than happy to get those ran as well. Everyone, just greatly appreciate your time on this Friday morning. I hope everyone has a safe and happy weekend. Again, thank you so much for attending this webinar. Gary, thank you for your time. And everyone have a wonderful weekend. Bye-bye.